So gold and silver have just crashed, and this happened after one of the most powerful rallies we have seen in decades. Asian markets closed lower, and behind this sudden shift is one single decision made in Washington. So Donald Trump has officially named the next chairman of the US Federal Reserve, and this move is not about politics, it's about control over money. Because when the Federal Reserve changes direction, markets don't just react, they reprice the future. So Donald Trump has nominated Kevin Warsh as his choice for the next Fed chair. And now technically Jerome Powell is still in charge. His term ends in May, and under US law, Trump cannot fire Jerome Powell. So why did market react immediately? Because naming a replacement this early is not normal. This is a signal to investors that interest rate policy could soon change, a signal that uncertainty has entered the system, and market fear uncertainty more than bad news. So US stocks fell in early trading, Asian markets followed, and after historic gains, gold and silver were suddenly dumped. But make no mistake, gold didn't fall because it was weak. Gold fell after a massive run. That 20% gold rally and 56% silver rally were driven by expectation of rate cuts, easy money, and weakening confidence in fiat currencies. So when Trump named a new Fed chair, the market was forced to ask a dangerous question. What if interest rates don't fall the way investors expect? And that single question was enough to trigger profit taking. ETFs saw investors pull money, traders locked in gains, and the rally reversed. So this was not the end of gold, this was a reset of expectations. To understand why this matters so much, you need to understand the power of the Federal Reserve. So the Fed controls interest rates, it controls inflation, and it controls the cost of borrowing for governments, businesses, and households. Every major asset class responds to the Fed. Stocks, bonds, gold, crypto, and real estate. And when the Fed changes leadership, the entire financial system adjusts risk. And that brings us to the real conflict. So Donald Trump wants lower interest rates. Right now, US rates sit around 3.5 to 3.75%, and Trump wants rates closer to 1%. He believes cheap money fuels growth, boosts markets, and makes debt easier to manage. And Jerome Powell completely disagrees. So Powell believes aggressive cuts risk reigniting the inflation, weakening the dollar, and destabilizing the economy in the long run. And this disagreement turned personal between Trump and the Jerome Powell. So Trump has publicly attacked Powell, mocked him, and called him too late. And when the Fed recently decided not to cut rates again, Trump escalated. That escalation came in the form of one name, Kevin Warsh. So Kevin Warsh is not a random pick. He served on the Federal Reserve Board from 2006 to 2011 and was appointed by George W. Bush. At the time, he became the youngest Fed governor in modern history. Trump almost chose him back in 2017, but he didn't. Why? Because Kevin Warsh was known as an inflation hawk. He opposed easy money, he criticized aggressive stimulus, and he warned that excessive money printing would weaken the US dollar. Trump wanted easy money. He believed Jerome Powell would continue the policies of Janet Yellen, and that calculation turned out to be wrong. Powell raised rates, Trump turned against him, and now years later, Trump has returned to the one man he once rejected. But here's the problem that we can't ignore. So Kevin Warsh has a long record of being wrong. He repeatedly warned about inflation when inflation barely existed. He feared inflation at around 2%. He argued for tighter policy. even as the economy was slowing. During the 2008 financial crisis, after Bear Stearns collapsed, Warsh still argued inflation was the main risk. And after Lehman Brothers collapsed, he made the same argument. What followed wasn't inflation, it was deflation. And the US economy contracted, prices fell, and the Federal Reserve had to unleash massive stimulus just to prevent collapse. And Warsh also warned that easy money would destroy the dollar. Instead, the US dollar strengthened dramatically over the following decade, rising more than 60% relative to other major currencies. This history is why many critics inside the Fed viewed him as rigid, overly ideological, and disconnected from the real-time data. So the key question now becomes unavoidable. So why Donald Trump pick a man with this track record? So there are only two realistic possibilities. Either Kevin Warsh has fundamentally changed his views, or Donald Trump believes he can influence him. Because if Warsh stays true to his past belief, this will not be an easy money Federal Reserve. It could mean slower rate cuts, less stimulus, and a higher tolerance for economic pain. And that has massive implications for markets. In such a scenario, bonds could regain their status as a safe haven. Long-term yields could stabilize or fall as investors seek safety. Cash becomes more valuable in a low inflation environment. Savers benefit, debt holders suffer. But risk assets face pressure. Stocks struggle when liquidity tightens, and crypto suffers when leverage unwinds. And real estate slows when borrowing remains expensive. And this is why gold and silver reacted the way they did. Not because the long-term case disappeared, but because the short-term policy path became unclear. And the market don't wait for certainty, they price risk immediately. And this nomination introduced doubt into the rate cut narrative, and that was enough to reverse a historic rally of gold and silver. So zoom out, and this is much bigger than one man. US interest rates shape global capital flows, and they affect emerging markets, they influence currency stability, and they determine whether money rushes into risk or retreats into safety. So this isn't a political story, it's a power story, that who controls money, who controls debt, and who absorbs the consequences when policy shifts. So the announcement has been made, and the adjustment has begun, and markets are now watching the Federal Reserve, not for what it says, but for what it does next.